Hi, I'm Joe from Spectre, and today I'll be walking you through a breakdown of the Q2 market to give you my tips on how you should be adapting your prospecting strategy to thrive in this market. So, we can't deny that the housing market is facing a lot of challenges in 2023, with the fallout from the September mini-budget and the Bank of England base rate increase. There's definitely a lot of unrest. Overall, agents should expect to see some shifts, with a possible rise in things like repossessions, but it's unlikely we'll see a rise similar to other tough times. With the high cost of living, we could also see an increase in people looking to downsize, or people choosing to stay put rather than enter a costly move as household budgets are squeezed. This all means that the market is starting to shift into one of necessity, and anyone coming to the market has fewer options than before. But it isn't all doom and gloom. There are some positive signs, like low fall-through levels and demand in urban areas rising. Today, I'll be delving a little deeper into 5 key market shifts and explain how to tailor your prospecting strategy to get the best returns in the current market. The first one is targeting new listings. Even though April saw the lowest level of new instructions since 2020, you'll have noticed in our market report that the number of new listings in Q2 is pretty much in line with the 5-year average. New listings levels are sitting within 1.2% proximity to the levels we saw in 2022. In part, this is a sign of the market restabilizing from the unusually high levels we experienced in recent years. This consistency proves how strong the market is, and I would urge agents to feel reassured that despite economic pressures, a certain level of new listings can be relied on. However, there is undoubtedly an element of economic uncertainty that plays a part in the total figures. UK Finance said that consumer confidence in their own financial situations is low, especially because of the high inflation and soaring interest rates. As long as these issues continue, households are much less likely to make decisions that could stretch their finances, which will hit the housing market hard. That's why agents need to be proactively reaching out to vendors and grasping every opportunity to win as many instructions as possible, helping them gain more sellable stock. And this is where prospecting tools like Spectre make light work of securing new instructions. Firstly, Spectre identifies addresses of all your competitors' properties and monitors them in real time, so you can easily target vendors at the most optimum times, such as a new instruction. Some of you might be wondering why you'd spend time and money targeting new listings, especially so soon after the vendor has entered the market. But this letter trigger is actually the second best performing for our agents, so we always recommend agents use it wherever they can. Let me explain why this might be the case. As you know, most or all agency contracts have a calling off period, where the vendor can freely switch agents if they're unsatisfied by the service. By using this trigger, you can target vendors during this time, offering them a way out and a better service. If nothing more, it's a great brand awareness letter that helps to build rapport. All you need to do is simply switch on the new instruction trigger in your account and Spectre will pull through all new to market properties. Then, it's as simple as click, confirm, and send. In the upcoming quarter, we're also predicting there to be a 2.5% increase in new listings and a more healthy flow of properties entering the market. So tweaking your prospecting strategy now will put your agency in good stead to acquire more stock. And then secondly, Spectre can help you generate your own listings and increase your instruction numbers by re-engaging your past purchases. How? With a feature called Anniversaries. It automatically keeps in touch with your past purchases by sending them a bespoke property performance report every year on the anniversary of their completion date, which includes details like current estimated valuation, value growth, and comparables. Sent with the report is a cover letter, which is your chance to soft sell your services if they're likely to move once more. This is an incredibly powerful campaign, especially right now, because you already have an established trust and respect with those past clients, which is invaluable due to all the external concerns at the moment. Whether they're looking to downsize, to cut costs, or to move for any other reason, you could not only plant the seed with Anniversaries, but become their first point of call should they take the decision to sell. Plus, in addition to the yearly triggers, you can choose to utilize our mortgage term triggers, which targets a past purchaser in the run-up to a possible mortgage term ending, so 2, 3, or 5 years after they move in. Maybe they won't want to sell, but you could offer financial and remortgage advice, which is so relevant and crucial right now with all the interest rate increases. This is currently a huge worry for homeowners, so having a trusted source that will help you find the best rate is key. The second key focus for agents should be reductions. Right now, one of the most powerful prospecting strategies your agency can have is targeting reductions. It might seem simple, but this one tactic could help you secure stock that is going to sell by targeting motivated sellers. In Q2, reductions have continued on an upwards trend, with a sharp rise in June. Last month alone, almost 88,000 properties reduced their listing price. For context, that's an 89% increase in reductions compared to June last year, and a 44% increase on the 5-year average. In fact, 24% of reductions so far this year have had more than one price drop, as the knock-on effect of overpricing is still impacting a seller's ability to find a suitable buyer. Things like economic pressure could also be leading to the shift, where consumers are on the lookout for a bargain, meaning that sellers will need to lower their expectations to sell their property. The best thing is, you can use these market conditions to your advantage by encouraging vendors to consider more realistic pricing with your on-market prospecting letters. Use the stats in Spectre's market report. Tell vendors that reductions are incredibly high and there is a high chance of their property also having to reduce before selling. It's a great way to capture their attention and draw them in for a second opinion on the property value. Then, on that valuation, use that as a chance to educate and guide the property owner. Come armed with property reports to back up your valuation and show them the smoother sales journey you could offer them. All of this will mean that you're presenting yourself as the true market expert in your area over the competition. So that's how you could spin your on-market letters. But with reduction numbers being so high, it's really important to be targeting any competitor stock that has reduced in price too. A reduction shows that a vendor is highly motivated to sell and is more flexible in their approach, compared to some vendors who are happy to wait and hold out hope in achieving the highest possible price. Agents who take on motivated sellers are more likely to find common ground between both parties and move forward to an offer, meaning a healthier cash flow for you. So, how should you be targeting these reductions? In Spectre, there are activity triggers to target a property straight after a reduction and the weeks following, just like with new listings. In fact, the reduction trigger is the most effective trigger in Spectre, with the highest success rates across the board, making it unquestionable in any agent strategy. However, prospecting is a long game. Instructions usually aren't won from sending one letter. It's about building brand awareness, trust, and a feeling of rapport with the property owner. It's important that your agency has already reached out to the homeowner before their moment of need, and this will make winning instructions all that much easier. One positive of the current market conditions are fall-through numbers. Spectre's Q2 market report showed that fall-throughs remained in line with the 5-year average and below the previous 2 years. Let's unpack this a little. The last couple of years saw a much greater demand and more competition between buyers, which led to rushed and over-budget offers, possibly followed by buyer regret and rejected mortgage applications. But the slowing market that we're seeing this year is giving buyers the chance to fully consider their offers before applying, which is reducing likelihood of fall-throughs. Even though these levels of fall-throughs are great news for your own stock, we can't forget about the 21% of sales that are still falling through. These fall-throughs are a great opportunity to target competitor stock. Again, in Spectre, you'll get real-time status updates, so when one of your competitors' sales has fallen through, you'll be able to contact those vendors with a bespoke and relevant message at such a pivotal moment. In fact, I just want to touch on that point a bit more, because as I mentioned, your letters need to be relevant to be most effective. So, not just one blanket letter across all your touch points. Content that is relevant to a vendor who has just experienced a fall-through, reductions, or withdrawal, whatever the situation. And now, you can do this so easily. Spectre's AI content generator is an intelligent letter writing tool that helps you write tailored letters in just seconds. Not only does Spectre's AI content generator know what trigger you're writing for, but you can prompt it further by giving it 3 USPs about your agency. I always recommend that agents change these 3 USPs depending on the type of prospecting letter they're sending out. So for a fall-through letter, you might want to add your fall-through rate if it's particularly good, that you have a dedicated sales progression team, and your Google rating as social proof. Then watch as the letters written are in front of your eyes. Spectre's market report not only looks at the UK market as a whole, but also delves a little deeper into the market shifts on a regional level. It shows that the lowest percentage of sales per available property was in Wales and Greater London, with Wales seeing a 2.4% year-on-year drop in average listing price. This could be because of the second home council tax increase we saw in April 2023, meaning that there's a drop in demand to buy a holiday home in these more rural areas. However, year-on-year price growth this quarter has actually slowed across all regions, and while there is definitely some growth, it's much lower than previous years. Post-COVID, the race for space saw a demand in rural areas soar as people adjusted to home working, and they traded urban homes for more green space. As office working has once again become more expected, there has been a return to urban areas, but not as quick as we'd expected. In fact, price growth in urban areas outperforms rural by only 0.3 percentage points, compared to a 4.8 point difference in early 2021, in favour of rural areas, where price growth reached almost 12%. And if we look at reductions once again, the Southeast experienced the most price drops in Q2, at 17.8% of all listings, compared to just the 11.3% in the Northeast. Staying on top of your localised market conditions is crucial to understanding what is happening and ensuring you focus your efforts in the right areas. Okay, let's take a look at sales agreed numbers in Q2 and the time in which they took to sell subject to contract. In the past 3 months, we've seen seasonal effects and market uncertainty start to have an effect on sales numbers, which have taken a dip from last quarter. But even with all of these challenges, the market is still showing some promising signs. The sales agreed figure has surpassed the 5-year average, with levels 3% above the average. This shows that there's still an ongoing recovery from the pandemic and a gradual steering back to pre-pandemic state of the market. And if we look ahead to Q3, the number of sales agreed is expected to stay fair against the usual seasonal effects we see every year. So sales numbers are looking okay, but the percentage of properties selling within 4 weeks has started to slow in the last few months, with 42.9% of sales occurring within the first 4 weeks, reduced from 60% in Q2 2022. We're seeing longer timelines for property sales at an average of 39 days on the market, which is a 10% increase on last quarter. This is contributing to a build-up of available listings and meaning agents could see a backlog of properties, both those currently on the market and those subject to contract. Even though these delays might seem concerning, there are plenty of signs of market strength, such as the low fall-through rates, which should provide some assurance that sales will eventually exchange. And not to mention, it's a lot easier to win a second instruction when properties are on the market for longer. This is where your on-market strategy really comes into play. At Spectre, we recommend around 15 on-market touchpoints for maximum success and making those letters as personal as possible. Adding the homeowner's name if you've got it, adding a personal photo and a sign-off at the end of your letters, both proven to increase effectiveness by 3 times. In addition to setting up a timeline of on-market prospecting, sold in your area campaigns are a great way to spread brand awareness, keep your agency at the forefront of homeowners' minds, and advertise your agency's success, especially in a more challenging market where properties are sitting on the market for longer. This kind of message will be hugely compelling to struggling vendors. When sold in your area campaigns are used in conjunction with your on-market letters, agents achieved a 67% higher instruction rate versus sending prospecting letters alone. Spectre's sold in your area campaign can be supercharged with intelligent AI property selection. This works by automatically refining the targeting of a campaign by instantly identifying off-market properties that are most likely to instruct. All of this means less wasted marketing spend and better returns from direct mail sends. Thanks so much for watching Q2's market report breakdown and prospecting tips. I hope you found it useful. If you want to find out more about how Spectre can help your agency, book a demo to chat with one of our experts. Likewise, if you have any questions, feel free to email the team using the email here. Speak soon.